Welcome back, everybody, and today I'm going to be going over the top 15 mistakes I've seen homebuyers make over the last 20 years. Now, this is 20 years of real estate knowledge dropped for you in the next 50 minutes, starting right now with mistake number 1. Now, these mistakes aren't in any particular order, meaning mistake number 1 isn't the worst and mistake number 15 the best, or vice versa. We're just going to go through them one at a time in no particular order, all of the mistakes I've seen buyers make, and these mistakes can cost you tens of thousands of dollars. So by the end of this video, you'll be in a good position to make sure that you don't make any of these costly mistakes. Now, mistake number 1 is waiving all contingencies. Now, again, I said they're in no particular order, but this one is a big, bad mistake. And a lot of people were making this mistake during the pandemic when the market was crazy and there was tons of competition and there were hundreds of offers on houses. In the worst case, we had at one point on a house in Citrus Heights over 1,500 offers reported on one house. And in that environment, buyers are falling all over themselves to do whatever it takes to make their offer stand out for the sellers. And one of the primary ways they were doing that was waiving all contingencies in their offer. Now, if you're new to buying a home, you may be wondering, Rich, what the heck is a contingency? A contingency is basically a clause or reason in the contract for you, the buyer, to be able to bail out of the deal and not purchase a home and get your earnest money deposit funds returned to you. Now, there are lots of them. You can have them for an appraisal, for your loan. You can have them for physical inspections. You can have them for reviewing seller documentation. And in fact, you have all of those built into the standard California real estate contracts and probably in your state as well, wherever you're watching from. And those contingencies are there to protect you. There's a whole team of lawyers who've been doing real estate collectively for a lot longer than me, who have seen all the mistakes buyers have made, all the ways buyers have gotten hosed in a transaction, and they have come up with contingencies to protect you against those. Now, if you waive those up front, it means, sure, you can do your inspections, but you can't bail out for any reason, for any of those things. So by removing your contingencies up front, you remove all of the guardrails built in to protect you as a buyer. The most crucial step in buying any home is making sure you understand the home you're purchasing, its limitations, the things that need to be fixed, the things that don't need to be fixed, what it's going to cost you, so you're making an informed decision and you don't get hit with 5- and 6-figure surprises for problems with the home that you didn't know about. So my recommendation is never waive all contingencies up front with your offer. Now, mistake number 2 that I've seen a lot of home buyers make is not getting pre-qualified for a loan before going out to look at properties. Now look, if you're working with any realtor worth their salt anywhere in the country, they shouldn't be willing to put you in the car or meet you at a house or open a door for you until you've gone through this process. And if they are willing to do that, it probably means they're newer or they're desperate for a paycheck, and so they're not willing to put you through the normal standard vetting process before taking you out to somebody's home, and that's a bad sign. That's a red flag. So anytime you call a realtor and say, hey, Rich, I want to go see a house. Can you take me out and show it to me? The first thing that realtor should do is ask you how you found the pre-qualification process. What kind of loan are you pre-qualified for? Does this house fall within your pre-qualification numbers? And if you're not pre-qualified for a loan, they should ask you to do so before they show you the home. And they can offer you 1 to 3, depending on the realtor, recommendations for a lender you can talk to get that done. So there's a bunch of reasons why you want to do this first. Number 1 is you don't want to go looking at houses that you can't afford, because then the houses that you look at that you can't afford simply won't measure up, and we'll talk more about that later. Number 2, you don't want to go looking at houses if you don't qualify at all and you can't buy a house at all. That's even worse and going to be an even sadder result when you fall in love with a home and find out you can't get it. And the number 3 reason why the realtor should be asking you to do this up front is to vet you and make sure you're a reasonable person and not an axe murderer when they're going to come meet you for the first time and show you a home. So for all of those reasons, it's really important to be pre-qualified for a loan before you start shopping for properties. Now, if you don't know a lender and you don't know how to start this process, I have a full video on it for you, one of our Informed Home Buyer podcasts that you can watch, but also just reach out to me if you're in my market or a trusted realtor in your market, and the realtor can connect you with a great lender to help you out. But this is a crucial first step in getting pre-qualified so that you can go confidently look at homes. Hey, if you're getting anything at all out of this video, hit the like button, click subscribe, and hit the bell so you don't miss another crucial video to help you understand the best way to buy a home. A mistake number 3 I've seen a lot of buyers make is not having the lender pull their credit before they go shopping for a home. And especially I've seen sellers make this mistake as well. Now here's why this is important. We just talked about pre-qualification. Part of the pre-qualification process should be to pull your credit and verify your credit score. But you can technically get pre-qualified quickly without taking that step and get out there and start shopping. And the lender will issue you a letter that says, hey, as long as we verify credit and credit checks out, they can get this loan. Now here's some potential problems with that. Again, you may fall in love with a house, find out you have a credit problem and not be able to get the loan. You may fall in love with a house and find out that your credit score is just low enough that you get a worse rate, and now the payment's going to be higher and you can't afford that house. You have to shop for a lower priced and thus lower quality home. And again, none of those homes will measure up once you've fallen in love with the more expensive one. I've seen this happen many times to clients who didn't want the lender to pull their credit. And even worse, I've had sellers do this and almost find themselves homeless. Now, this happened to a client of mine. I was going to sell their home for them and then help them buy a new home. And I told them to make sure to have a lender go all the way through the pre-approval process and have their credit pulled before we list their home on the market, because I knew their home would sell quickly. And in California, at least, when you sign an offer to sell your home to somebody, you really have almost no back out room. The buyer has to blow a timeline once. You have to issue them a 48-hour notice to perform. You have to blow a timeline a second time, and then you can finally kick them out of the deal, and that's very, very rare. So essentially, when you sign a contract as a seller, you're locked and loaded. You're selling that house no matter what. Now, if you can't turn around and buy a house, that's a problem. So this particular client had recently bought a luxury car and had their credit pulled to purchase that luxury car. More on buying cars and things when you're shopping for real estate later in this video as well. That's also a bad idea. But this was long enough ahead of time that that particular thing wasn't an issue for them. But they assumed that because their credit was good at the time that they purchased the car, it would be good for the home. And they didn't listen to me and they didn't have their credit pulled. We got a buyer for their home. We got them into contract on their home. We found their dream replacement home. I got them into contract on that home. The lender pulled the credit and found out, there was a like $50 collection from 10 years ago from T-Mobile where they'd been sending the bill to the wrong address. They eventually sold that debt off all the way down the line to the bargain basement bottom feeder debt collector who didn't know what he was doing, and he recorded it against the wife's credit score in a way that made her credit score unreportable. Her credit score could have been reported as 0 and we could have gotten the loan, but at unreportable, that was a problem, a massive problem. These people had kids, they had 2 large dogs. Getting rental properties that would allow their big dog breeds was a problem. And essentially at this point, they were facing down the barrel of being homeless. Their buyers would not let them out of the contract to sell their home to them. And it took us 3 weeks and 14 different lenders to solve that problem. That was a lot of stress, and they very well could have found themselves homeless at the end of that process. Now, I'm in the business of helping people get into houses, not being homeless, and that's why I say it's very, very important that you have your credit pulled before going shopping for a home. Now, why do people sometimes balk at having their credit pulled? Well, they think it's going to knock their rate down, and I have a whole podcast episode on that you can watch in the Informed Homebuyer podcast playlist as well. But essentially, when you are buying a home, having your credit pulled will drop your credit score a tiny bit and it will recover very, very quickly. So it's not a big deal. That's not a reason not to get it done. Now, if you're working with a lender and they say, don't worry about it, I'll pull your credit later. That might mean they don't want to spend the $30 thinking that you maybe won't get over the finish line and buy a home. And they're going to be out $30 on a credit score. Also a bad sign, go get another lender, right? Any lender worth their salt who's doing a good amount of business does not care about spending a few bucks on a credit report to get you fully vetted to buy your home. So this is a very, very important step. Do not skip this one. So right about now, you're wondering who I am and why you should be listening to me about real estate or anything at all, really, and that's a fair question. My name is Rich Curtis with eXp Realty, and I've been helping people buy and sell homes for over 20 years now in markets ranging from the Great Recession to the COVID market insanity and everything in between. My goal with this channel is to help you make the highest quality real estate decisions you can from the comfort of your couch. So to that end, let's jump right back into our list of the top 15 buyer mistakes I've seen people make over the last 20 years so you can avoid all of them. Mistake number 4 that I've seen buyers make when purchasing a home is not getting a realtor and lender involved early enough in the process. Now, there's lots of reasons for this, and I have a whole video on this as well. But people, when they're not sure they want to buy yet, or they're not sure they qualify, they might be embarrassed to have somebody look at their finances because they're worried they won't qualify. They might not want to waste somebody's time, which I really appreciate that. As somebody who feeds my family by selling real estate, I don't want people wasting my time either. They might feel like they're not ready yet in the process, and they don't want some salesy jerk taking down their email and their phone number and calling them every 5 minutes asking if they're ready to buy a house yet, right? So those are all really valid reasons not to contact somebody, but unfortunately not contacting a realtor and a lender early enough in the process really puts you at a disadvantage. So I'm going to give you some tips and tricks to avoid those things you're worried about. First off, nobody should be embarrassed about wherever they're at financially. I have people call me all the time that don't qualify, and I run them through my lender and they don't qualify, and that's okay. Everybody has to start somewhere. And having that conversation and finding out you don't qualify allows myself and my lender to counsel you on the things you will need to do in order to qualify, which allows us to put you on the path to home ownership. And of course, we believe deeply in the benefits of home ownership, and we are happy to put anybody we can on the eventual path to home ownership. Maybe you're not going to buy today. Who cares? Maybe it's a couple of years from now. We're happy to help you. You'll need a realtor and lender then. You can call us back and honor the time we put into you then. It's a free service we provide, and it's not a problem. I'll tell you a story. When I was in college, obviously I was not a realtor at this point. I was living in Santa Cruz. My brother and I found an actual beachfront house. One of the biggest mistakes in my life was not moving mountains to buy this house. It would be worth a mint today. My brother and I, the realtor vetted us, put us in contact with a lender, took us out there, and eventually in the process, we found out that although we maybe technically could afford it and get the loan, really looking at our finances, we couldn't make it work. But that allowed both of us to take a step back, evaluate where we were at, and put ourselves on the path to eventual home ownership. And then when it came time for us to really go shopping for our own homes, we really knew what we could afford, what we could qualify for, and we were much more informed and much better prepared buyers. Also, getting a lender involved early in the process allows you to pull that credit and make sure you don't have a credit problem, because if you do, lenders have a lot of resources to help you repair your credit. Again, check the Informed Home Buyer podcast list. We have a credit repair episode where you can learn all that and do a deep dive. We're not doing that in this video, but just know that if you have some problems and you find them early enough, a lender can fix them so that when you do find your dream house and you fall in love with it, you know you can get it and it's not a problem at that time. Getting a realtor involved early in the process can help explain all sorts of things like closing costs and other things you may need to save for that you're not prepared for. One of the most common things that happens is someone comes to me and they've saved up the money for their down payment and they've never even heard of closing costs. And we'll talk more again later in the video about closing costs. And they find out that, man, they got to save another big chunk of money here to be able to go out and purchase their home. And it's a real letdown when they've been working so hard. And if they knew they needed to hit that number, they could have been saving all along for that number. So get a realtor and a lender involved as early in the process as you can. All right, biggest home buyer mistake number 5 is not accounting for closing costs. I told you we'd talk about that later in the video. I also told you these are in no particular order. So that one happened to be right up next, and it's a big deal. Now, you may think you have to have 20% down and all these things to buy a house, but the reality is you can buy a house within the normal lending landscape for as little as 3% down. And there are even some 100% financing programs for people like veterans and things like that with the VA loan. And I have videos on all of this for you in that Informed Homebuyer podcast playlist. So check that out. But you have been saving. Say you found that out, you've been watching, you've been learning, and you know, hey, I need 3% down, or I want to do 5% down, or I want to do 20% down because I don't want to pay private mortgage insurance. Great. But what you may not know is you also have to pay closing costs. And there are some things we can do to try to get these paid by some other people for you. But just working with the basics here, in California, if you're getting a loan to purchase a home, you can ballpark your closing costs at 3% of the purchase price. Now on this channel, we often work with a median home price around $500,000 because in a lot of my primary markets, that is a median home price, around 505 in Placerville, 516 in the greater Sacramento area, that sort of thing. So at $500,000, of course, a 3% amount for your closing costs, that's gonna be around $15,000. Now, it should actually be less than that. This 3% has some padding in it, so it's a conservative number so that if you know you've got that, you'll always have it covered. The number should come in a little bit less than that. But if you were thinking I need 3% down, you saved up your 15 grand, and then you come to me and I say, okay, how about closing costs? That's gonna be another 15 grand, and you find out you really needed to save double, and you didn't know that, and you hadn't been accounting for that, it's a real letdown because now you can't go out and get shopping. Again, we have some strategies where maybe we could get you out and start shopping a little bit sooner than that, but it's a real bummer to find out at the 11th hour when you're ready to actually go open doors and look at cool places to live that you didn't save enough money because you just didn't know you have to. Not because you couldn't, not because you didn't have the ability to, not because you weren't diligently saving for your home purchase, just because you didn't know. So not accounting for closing costs is a big deal and a big mistake buyers make. And if you get a realtor and a lender involved early in the process, they can tip you off to those things so you know exactly what you need to save for. Mistake number 6 when people are buying homes, and I have seen this one a lot, and this one can be a terminal mistake. This can kill a transaction and make it so you don't buy a home, is encumbering your credit just before or during the transaction. Now, what do I mean by encumbering your credit? I mean buying anything on credit or doing anything that adjusts your credit. So sometimes it can be paying off the wrong credit cards when your lenders vetted and put things together in a certain way that can change things. Usually that can have a positive effect. Sometimes it can have a short-term negative effect depending on your credit situation. So you don't want to make any changes to your credit without talking to your lender first when you're about to buy a home. Often though, this takes the form of Best Buy having a 0% interest credit card offer if you buy these appliances today, and they're like, I'm buying a house, I need the appliances, great deal. They take it, they've opened up a new line of credit. Now, what did that do? Well, it's a new line of credit, which is actually a ding on your credit score, and it's gonna bring your credit score down. So if you were right on the bubble between qualifying for like an A paper rate or not, that could knock you below. What else does that do? Well, now you have a greater access to capital, right? So now you have more money that you can borrow, which could potentially make you be seen as a greater risk, which could also hit your credit and bring it down. So this can have a significant effect on your credit. Now, you also probably did that because you were buying something. Well, now whatever you bought, because you bought it on credit, is a debt against you, and that's going to adjust your debt to income ratios, which are what you need to hit in order to qualify for a loan. And if it pushed you out of the acceptable ratio ranges, then you don't get a loan, you don't get the house. Now, usually, if you're just buying a couple of appliances, that's not gonna matter. But we have had some clients in the past do things like go out and buy a new motorcycle or a new truck. They thought because they were in contract on the house it was okay, but really it has to be after closing. So they went out and bought a new truck or bought a new motorcycle, and now they've encumbered their credit for 20 grand, 30 grand, 50 grand. These days, a new vehicle, 60, 70 grand, right? Now, that much debt can shift your debt to income ratios to the point where you don't qualify for a loan. I'm not gonna do a deep dive into debt to income ratios here. Again, we've got information on that on the Informed Homebuyer podcast playlist. But just know that the lender is looking at your monthly income based on your total monthly debt payments and your monthly income based on your total housing payment. Those are your top and bottom ratios there. And those ratios have to fall within a certain limit in order for you to get to the loan. And if you take on a bunch of new debt, you may blow it for yourself. So the first rule of home buying is don't talk about home buying. No, that's something else. Just kidding. The first rule of home buying is don't encumber your credit. Don't change your credit situation in any way. Don't buy anything on credit. Don't take on new debt. Don't even pay off any debt without talking to your lender first. Home buying mistake number 7 is cheaping out on inspections. Now, this is a big one. Buying a home is expensive. People have been saving for years, and almost everybody is on a tight budget when they're buying a home. And there's all sorts of fees and costs that pop up that you weren't expecting. And when it comes time to do inspections on the home, to inspect a home properly, in my opinion, you're going to spend, in my market, between $1,600 and $2,000 to inspect that home. That's a fair bit of money while you're in the process of buying a house. And that is also a fair bit of money to potentially lose if you choose not to buy that house. So how would you lose that money, right? Your earnest money deposit that you put up when you purchase a home, which is usually in my market, 1 to 3% of the purchase price, is protected by lots of clauses in the contract. Again, it's nuanced and there's not a contract or home buying course, so we won't go that deep into it, but your inspection money is not protected. The risk you take, the financial risk you take whenever you get in a contract to buy a home is the money you're going to spend on inspections. If you find something that is an ultimate deal breaker and you decide not to purchase that home, then you will not be paid back for your inspections, which, like I said, is around $1,600 to $2,000 if you're doing it right, in my opinion. So sometimes people want to cheap out. I've had people choose to do no inspections. Makes me very uncomfortable. I don't like that. I've had people choose to do just 1 inspection or 2 inspections. But to do a full suite of inspections is really important. You want to have the roof looked at and have a roof inspection and find out what's going on there. You want to have a whole home inspection done to give you an overview of everything that's potentially wrong with the house. You want to have an HVAC inspection done. You want to have a sewer lateral camera inspection done. If there's a septic, you want to have the septic inspected. If there's a well, you want to have the well inspected. There are a lot. You might be particularly worried about radon gas and you want to have a radon gas test done. They're not that common in my market, but in some places, every transaction does them. You might be particularly sensitive to mold and want a mold inspection done. Either way you slice it, they all cost money, and sometimes people don't want to pay it. But if you don't pay that money, you don't have the knowledge of what's wrong with that house, and that can really bite you in the backside. Now, for the most part, I can tell you, I don't have a lot of transactions blow up or people bail out over findings and inspections. We do have a lot of negotiations around seller concessions for things that are wrong with the house, so the buyer has the money to fix those things, or having the seller repair them, those sorts of things. So it can be part of the negotiations and a bargaining chip so that you can have a little bit of the work done for you on the seller's dime. Not usually all of the work, but we can usually negotiate for some of the work, but it doesn't usually blow up the whole transaction, but occasionally it does. So here's a smattering of some scary things I've found over 20 years in real estate on inspections that, had someone chosen not to do those inspections, they would have really been in a world of hurt. Here's one of the craziest ones. In the basement of a home in Placerville, we found a 2,000 or 3,000 gallon spring-fed cistern with a concrete top on it. And the water was filling up so continuously that there was a small hole in the top of that concrete slab on top of it that would just let the water bubble up, pour through the basement, out down the hill, and into the creek. And at times in the winter, when the water was flowing a lot, it would actually float that big concrete slab and water would pour out underneath of the thing, looking like some kind of a Mayan temple sacrifice pad. It was crazy. So we found that. The inspector found it, and we couldn't figure out what it was. And we ended up having the sewer guy who was there with his camera to do the sewer lateral inspection, put his sewer camera into that hole and go ahead and go around it. And then we're able to take measurements of it to figure out how many gallons of water were sitting there. Now, that was something that was unsolvable. The basement was always going to be wet. It was always going to be filled with water. You're not going to stop that natural spring. And for my buyer, that was a deal breaker, and he moved on. We have found toxic materials like asbestos in houses over the years. We have found some pretty serious mold problems. For the most part, the whole mold thing is really overblown. You should not be that worried or stressed out about mold when buying a house. There's a whole industry that has sprung up around saying really big, scary Latin words and charging you a lot of money around mold. But in some cases, it really is a big deal, and we've had a couple of those. We have found, including actually just last week, a house where it had a beautiful roof on it, was only a couple of years old, but the homeowner put it on, had no idea what they were doing, put it on improperly. So the whole roof is essentially shot. We have found cracked foundations. Once I had an old broker of mine call me down to a house because he knew I had formerly worked in the trades, and he said, I need to ask you if this is a fixable problem. And he took me to a tract house down in Orangevale on a slab. The carpet was popped at the corners. It wasn't fixed down, and he pulled the carpet back, and right in the middle of the room, the foundation was cracked and heaved. I'm talking this high, like enough to trip and fall on your face, 2 pieces of the foundation, cracked, separated, and lifted this high. Now, of course, anything is fixable with time and money, but it's a bad idea to buy that house. Had you not done an inspection, you wouldn't know those things were there. So it's really important. And I could go on and on with real estate horror story, campfire story time here. But the important thing is, if you do the inspections, you never end up being an actual horror story. All of the clients I just described found those items during inspections. They were either able to negotiate to have them fixed or say, that's a deal breaker for me, and we move on and bought a different house. So they didn't purchase that problem off of that seller. That's why inspections are so important. Never cheap out on the inspections. I'm telling you, save up $2,000 so you're prepared to do any inspection you need to do on any house you buy in any market in the country, and you will do yourself a massive service. It is very cheap insurance. Look, if at the end of this video, you still aren't sure how to avoid the buyer mistakes and you're wondering where to start, you'd really like someone to guide you through this process step by step personally, feel free to reach out to me via the contact information on your screen or in the description down below. Like I said, I've been helping people buy and sell homes for over 20 years now. I've helped hundreds of families just like yours, and I'm always happy to help. Now, back to our list of the top 15 mistakes buyers make so you can avoid each and every one of them. Biggest homebuyer mistake, number 8, is listening to their family. Now, I know this one might sound a little rude or a little snarky, and I don't mean it that way. Your family is looking out for your best interest. They have your back, and they want to make sure you're making a wise choice. They want to make sure that you don't suffer from tens of thousands of dollars of consequences by some of the crazy stories I just told you in the last segment. And that is a really good impulse. And that is a really kind thing they're trying to do. Here's the problem. Most of you, your parents are not real estate experts. Most of you, your parents are not construction experts, plumbers, electricians, or that sort of thing. And even the ones who have family members that are, they are not a neutral third party giving you an opinion about this house. They have a dog in the fight. They have a bias. And over the years, what I've noticed by and large is when you bring family into the home before you've bought it and you're thinking about buying it to ask their opinion, they come up with the craziest, wildest things that they think are wrong with the thing, and mostly tell you what an unmitigated lop of poo this house is and how you should run screaming for the hills. And for the most part, they're wrong. For the most part, these are really good houses. I've watched plenty, and especially my younger clients, my first-time home buyers, get chased away from great homes over minor problems that people made a mountain out of a molehill for them and scared them off. Problems that we probably could have even had fixed or solved by a seller had they not gotten so scared. The family wasn't trying to do anything wrong. They were trying to help. They were trying to give good advice. They were trying to protect. That isn't always the best impulse or the best result for you as a home buyer. It is often, in my opinion, better to get a clear-headed third-party opinion on the home. I also am not telling you whether the home is good or not because I'm a realtor, not a home inspector, not a plumber, not an electrician. So we have you hire independent third-party people that we have no sway over, that we don't share fees with. There's no reason for them to say anything about this house other than what is factual and true, and that is the best advice to base your decisions on. So in my opinion, it's always best to get your inspections done, commit to the purchase, let your family know, hey, I'm buying this thing, I'm really excited about it, because then when they come in, they'll just tell you all the great things they love about the place, and you already know all the constructive stuff. You have a stack of professional inspections telling you what you need to know about that property, and you can just feel the love and support and excitement of your family for this amazing achievement you've just done of buying your own home. Because let's face it, at today's home prices in our country, achieving home ownership is a big deal for anyone, and you should get to bask in the enjoyment and the pride that your parents and your family members feel in you for doing that, and not have to try to convince them why one broken GFCI outlet is not a reason to run screaming from this house. Big homebuyer mistake number 9 is looking at homes that are out of your budget. Look, I already told you it's important to get a lender involved early on in the process and get pre-qualified for a home loan. Now, most often people actually find out they're qualified for more home than they really want to afford or can afford, or that would have a payment on it that's more than they really want to spend. So in the pre-qualification process, you want to give your lender your payment comfort. Hey, I'm good making like $2,500 a month payments, $3,000 a month payments, no more. Then the lender can, as long as you qualify for that amount, reverse engineer what the home purchase price will be and give that to you. And then you give it to your lender your realtor, and instruct them not to show you any houses more than that. Now, any honest realtor worth their salt will never push your price range. I do have clients all the time end up buying houses slightly higher than what I was showing them, but in every case, they have gone out on the internet, looked at higher priced homes on their own, and asked me to show them to them. I have a firm rule in my business not to show you a home that is a penny more than what you've told me you qualify for or are comfortable paying. And here's the reason. The difference between a $500,000 home and a $550,000 home is significant. The difference between a $500,000 home and a $600,000 home is massive. So if you go out looking at $600,000 homes, even if you qualify for them, but you really only want to afford a $500,000 home, you are going to convince yourself to make some bad choices. That house is going to be that much nicer that you are going to just rationalize why it's okay to spend more than you were comfortable with to get that much nicer home. The quality jumps up dramatically, and it's a very rare person who can resist that. So as a financial guardrail for yourself, for your own, easy for me to say, right? For your own financial safety, you want to stick to showing properties that are within your price range, looking at properties that are within your price range, and restricting your realtor to showing you properties that are within your payment comfort. And if your realtor pushes it, ask them not to. And if they do it again, kick them to the curb, get rid of them, get somebody honest who's going to show you homes that you can comfortably afford. If you look at higher priced ones, you are going to make some bad financial choices, and that's not good for anyone. Big buyer mistake number 10 is not having an emergency fund. Look, this is not financial advice. I am not a financial advisor. But my goal with this channel is to help you make the highest quality real estate decisions you can from the comfort of your couch. And my goal as your realtor when we go out and look at houses and buy houses together is to make sure that you can keep that house and enjoy it for years to come with your family, and you're not at risk of losing it. And that's where the emergency fund comes in. Now, you can go out on the internet and find all kinds of financial gurus who will tell you all different things about emergency funds, and everybody's got their opinion. Some people say a 6-month emergency fund. I, in particular, like to keep for my family 8 months to a year worth of emergency fund. Some people say 3 months is enough. You'll have to decide for your family, but I think across the board, 6 months of emergency fund is a good benchmark. That means having in your savings account enough money to pay all of your bills for 6 months. Now, that's over and above the money you're going to need for down payment and closing costs, right? Now, why, as someone who makes their money selling you houses, would I tell you to pause on buying a house until you've saved more money? Why would I do that, right? Because it's in your best interest. It is in your best interest to have more money saved up, even if it delays your home purchase. And here's why. If you lose your job, if you have a medical problem, if your spouse has a medical problem, or your child has a medical problem that requires you to miss a lot of work, lose money, spend a bunch of money on medical bills, whatever it is, life throws a lot of curveballs at us. I've been on this planet for almost 50 years now, and that is really hard for me to say out loud. But in that time, I've been hit with a lot of curveballs, and I've seen my friends, family, and clients hit with a lot of curveballs. If you don't have any money in reserves, if you are tapped out on day one when you buy a house, if you had saved up your 3% down payment, your 3% closing costs, and you make your first mortgage payment and you're down to $100 in the savings account, that is not good. The first curveball that hits you, you are hosed. You might not be able to make your mortgage payment. You might be forced to sell the house, which if you do very quickly after purchasing it, you almost always will lose money. You may, in some cases, end up getting foreclosed on, which is even worse. Or you may have to make choices between buying groceries or making a mortgage payment. Those kinds of things are really painful, really hard on families, and mostly totally avoidable if you take the time to build up this emergency fund. Now, we're not a financial education channel, so you'll have to go out and do a little research on your own for the best ways of building up that emergency fund and decide for your family how much you want. But my main takeaway here for you is if you are going to be tapped out, zero or very low account balance on day one when you buy your house, it is better to pause and wait and save up more money. Don't buy a house if you're going to be completely tapped out on day one. It's not a good choice for you or for your family. Big buyer mistake number 11, using friends and family for inspections. Now, this kind of goes hand in hand with cheaping out on inspections and kind of goes hand in hand with listening to family. It's kind of a combination of the both of them, and I've seen the worst outcomes with this one. So everybody has a friend who works construction. Everybody has a friend who's an electrician. Everybody has a dad who used to work in the trades or is real handy or builds a heck of a birdhouse. But here's the thing. Even a general contractor is not your best choice to inspect a home. Home inspectors go through things with a fine-tooth comb. They have a whole checklist, a whole process. They check everything. They have connections to refer you to people to get a deeper dive into whatever system. If the plumbing looks hinky, they'll tell you and refer you to a plumber. If the electrics look hinky, they'll tell you and they'll refer you to an electrician, right? So it is not in your best interest to use an individual tradesperson that you know for an inspection to save a few dollars versus paying a formal home inspector to do the work. Now, the caveat to this is if you've done your full slate of professional inspections and you want to bring in your friend or your dad or your uncle to come in and take a look for you at that point, I think that's a great idea. And you know what? You can hand them the report from your home inspector and say, hey, here's the report. Here's what he found. Here's the things I'm worried about. In your experience, what will this cost? Will you be able to help me fix these things? What would you be worried about and what would you not be worried about? That's where those people come in very handy when they have a professional report to work from and they can give you their opinions or offer their help. That is a great way to use these people in your home buying process, but not as your primary point of gathering information. Stay away from the friends and family inspectors and use your own professional inspectors for each of these inspections. Now, the one caveat to this where someone may yell at me if they've worked with me and know, they might know that my older brother is a home inspector. He worked in the trades for 20 years. He is literally the best home inspector I've ever worked with in 20 years. So if I were buying a house, I would be using my older brother, but that's because he is a professional home inspector that I use in my business. He's actually one of the top home inspectors in the area that many realtors use. So if I wasn't a realtor and I was using one of the other local realtors, it's likely he would be my inspector anyway. The person I wouldn't use is my oldest brother, who is amazing at carpentry and woodworking, does incredible work and a great guy. I would bring him in and show him my other brother's report and ask him what are the things he could help me work on once I buy this house. That's how I would use him. So if your family member is actually a professional home inspector, then of course, by all means, use them. But if they're just a contractor or something like that, get their opinions, get their help, but don't use them for your formal inspections. Also, as a final caveat to this, we often use those inspections in real estate to negotiate on your behalf for repairs or concessions. Now, when I send over a home inspection noting problems from a licensed home inspector who's known in the area, who the listing agent may use themselves when they're representing buyers, that carries a lot of weight. When I send over a handwritten note from your cousin Timmy, who works for a contractor, it carries no weight. And in fact, they distrust it because of the relationship, and it's not as good or even a valid bargaining chip on the table for trying to get repairs or concessions. So the little bit of money you pay to have the professional inspector can actually get you thousands or tens of thousands in concessions by having a real reliable report to slide across the table to the seller. Buyer mistake number 12 is making the timelines in the contract too tight, or listening to a realtor who's encouraging you to make the timelines in the contract too tight. Don't do that. There's only 2 times when you should be really making the contract timelines really, really tight. If you're in a competitive offer situation and it's something you need to do to win, then go ahead, but know the compromise you're making and be prepared in advance to hustle and get the inspections you need. Don't let that tight timeline cost you to cheap out on inspections and therefore not fully understand the home you're buying. Reason number 2 why you may want to have tighter timelines is if you are an all cash buyer. We have a 30-day escrow in California, and really the boilerplate in the contract for inspections is 17 days. So what's happening between day 17 and day 30 is really just getting your loan. So if you're a cash buyer, you don't really need any of the time after day 17. So you can reduce your close of escrow timeline really, really safely. Oftentimes with our cash buyers, we want to leverage their cash to get a better deal on the property. It's not always possible, but we'd like to try to do that if we can because, hey, cash is king. It's a pretty made deal for the seller. They don't have the variable of worrying about whether you actually qualify for your loan or not. So for some cash buyers, we will do things like say, hey, we'll do inspections in 10 days and we'll close in 15 or close in 14. Still pretty reasonable. We've shaved about 7 days off our inspection period, but we might be able to get some purchase price reduction for that reduction in time. Again, if you're going to use this strategy, you need to know that your realtor has inspectors lined up that will get to you within that time frame so you can get the reports early enough to still have a reasonable time to digest them and then respond to the seller with any requests for repairs or concessions within the timeline that you have. By and large, if you're not in either of those two categories, or you don't have some other, personal issue where you have to be in the house by this date, so you have to go fast, it is not in your best interest to shorten timelines. It puts a lot of pressure on you. That pressure makes it harder to get through inspections, harder to digest them, harder to get second opinions on them, and puts a lot of pressure on you to make the final call to buy the house. And nobody makes huge financial decisions great under pressure. That's not what we want for our buyers. So by and large, if you can have normal transaction timelines, which as I say in my market is going to be 17-day contingency period and a 30-day close, stick with those normal timelines. Give yourself some breathing room. These are big, hard decisions. You want to have some time to make them. Buyer mistake number 13, which this one actually is in some ways more of a seller mistake than a buyer mistake, is finding the home you want to buy before selling the home you're in. Now look, almost everybody across the board makes this mistake. It's sort of natural. It's human to want to go get excited about a house, find something to replace it with before giving up the house that you live in that you still like or love. Nobody wants to give up the house they're in without having a place to go for their family. That feels very stressful. But here's why it's best to get your home sold before finding a replacement property, or at least get the process started first. And that is because most people don't qualify to own two homes at once. If you do, great. If you have the money to just go out and buy your new home, get moved in, sell your old home, awesome, no problem. But for 99% of us mere mortals out there working for a living, we don't have the extra few $100,000 laying around to make that happen. And so we need the proceeds from the house we sell to buy the new house. Now, when you're in that situation and you go out to buy a house and you find the house you love before you've sold the one you need to sell, you've only got two options. Both of them cost you a lot of money. Option number one is to get a bridge loan. That is a loan product that basically gives you an interim loan to finance the purchase of that property before you sell this property, and then you backfill and pay off that loan with the proceeds of the home that you're selling. These are expensive because the way lenders make money off your loan, of course, is on the interest, right? And at the interest rates we have, even in today's interest rate environment, they're not making that much money on any individual month from you. We're talking a few $100. So it's the interest over years and years that actually makes the lenders money. And so these short-term loans, they're not going to get that interest over years and years and years. So they have to charge you a bunch of money right up front for the privilege of borrowing that money for them to make any money on giving you the loan. So bridge loans are expensive and they're not that common. There's not that many to choose from. Now, you can go the hard money route. Now, hard money, spans the full gamut from reasonable, normal human beings that have extra money and want to lend it out to people on a short-term basis to make money on their money, all the way down to Joey the knee breaker version of hard money, and you don't want to find yourself in that lending landscape. But in general, I recommend, unless you're a really skilled and experienced investor, to stay away from the hard money landscape. So that leaves you bridge loans or buying contingent. And we will go over buying contingent in another segment of this video. But the thing to know is it just takes away all of your bargaining power. And so you're at a real decreased, diminished position to make any kind of bargain on your new home because you don't have the money to actually buy this home yet. Now, I'll do a whole video on this for you guys, going into the nuances of different ways to accomplish selling one home and buying another. We do it all the time. We even do it contingent all the time. But the best scenario is for you to find some kind of interim housing solution or get a rent back on your primary home and get your home sold before buying your next home. Now, if you really don't want to do that, which again, it's like 98% of my clients don't, then reach out to me directly and I can walk you through all the options for doing that a different way and doing it contingent. Mistake number 14, it will come as no surprise, is writing contingent offers. So following up on that last segment, if you are trying to buy a home before selling your other home, one way to do that is to buy contingent. That means you are sending an offer over to the seller of the home you want to purchase saying, hey, I want to buy your house, but it is contingent upon me getting my home sold first. So you're asking them to take their home off the market for a considerable chunk of time, betting that you can get a buyer for your home in time to buy their home. And in the meantime, they're not really getting other buyers for their home. They kind of can. There's some nuances to it, but in general, their ability or likelihood of getting another buyer goes way, way down once they mark the property pending on a contingent basis with you. So for some sellers, they're not looking to move very quickly. And maybe they're okay with it. I get offers like this accepted all the time. I just finished up 2 deals. Both of them were contingent. Here's the challenge. The general expectation is that when you write a contingent offer, it will be a full price offer with friendly terms. Because why on earth would the seller take their property off the market on the gamble that you can get your house sold if they're already giving you a discount on the property? I might as well just wait for somebody else who can close within a reasonable time, 30 days, 2 weeks, and give them the discount. Right? There's no reason to take the property off the market for you. And the reason or the incentive you're giving them is I'll give you full price. So you often end up paying more for the property or maybe even over market rate if that seller's got an unrealistic price and you decide to give it to them because you want the property on a contingent basis. So we really don't have a lot of great room to negotiate on your behalf if you're writing contingent offers, which is why it's better to get your home sold and have a rent back where you can then go out and buy your home. Get your home sold, have an interim housing plan, a temporary rental, RV, family home, something like that. We can go through all the options with you and make a custom plan for you, but it's always better to have your home sold, have the cash in the bank to make your next purchase or the cash loan combo lined up to make your next purchase before going out and shopping for a home. Now, experience tells me 99% of you won't listen to that advice and you'll do it the other way. So we're very experienced in doing it the contingent way. It's just a bummer for you because we can't do a whole lot in negotiating the terms of the deal positively or beneficially for you when you're coming in contingent. Buyer mistake number 15 and the last mistake on our list, and this one is a doozy and I see it all the time, is sacrificing location for a prettier house. Now look, I get it. We all have this vision of our dream home in our heads. And when we start shopping for homes within our actual budget, they often, in fact, almost always, unless you're a very well capitalized buyer, don't line up with our vision of our dream house. Compromises have to be made and we are not going to get exactly what we want in order to stay within our budget. And very often people have chosen the neighborhoods they're looking to shop in because they're safe, they're convenient and close to work with short commute times, they're in the school district they want for their kids, or they're near the recreation that they like to do all the time. And these are things that really affect your daily life. Very often what happens is when a buyer finds that they can't find as pretty a house as they want in the neighborhoods they're looking in, they start to move out, go further afield, look at some other neighborhoods. And these neighborhoods may be less safe, be experiencing less appreciation right now, not be in the school district you wanted for your kids, be a much longer, more arduous commute for you, or maybe require you to load up gear and get in the car to go do your favorite recreation, whether that's kayaking or biking or whatever it is. And so it'll really, really affect your daily life and really grind you down. I know you've heard it, but it really doesn't sink in for people because it feels like a trite cliche. But the 3 most important things for any home are location, location, location. You can change the flooring, you can change the paint colors, you can change nearly everything about a house except where it sits. You can't move it unless it's a trailer. So it's most important to pick a home in an area you want to live because this is going to be the hub of your life for a long time to come. So don't sacrifice location. Far and away, it is better to sacrifice the quality of the fit and finish of the home. Pick a less pretty home in a better neighborhood and you will be happier for it. And when you call me to sell, it'll sell for more money, it'll sell easier, and you'll be happier then as well. All right, this wraps up our discussion of the 15 biggest mistakes I've seen buyers make over the last 20 years. This is a pretty big list, and if you pay attention to all of these, you're gonna save yourself a lot of time, heartache, and most importantly, a lot of lost money. So I hope this list really helps you in preparing for your home purchase. Now, if you want to do a deeper dive, you can click this video right here where we talk about why we think buying a starter home versus buying your forever home is maybe a better choice right now in 2025, given the economic climate. If you're just at the beginning of your process, you can click this video right here to learn about getting pre-qualified for a loan. And if you want to learn about all things home buying, first-time home buying, and how to get educated and do the best job you can so you get the best deal and make the best financial decisions for your family, you can click this playlist right here for my Informed Homebuyer podcast that I do with my lender, Dave Miller, once a week, going over everything you need to know in order to buy a home. As always, thanks for watching. Thanks for making it to the end with me, and I'll see you on the next one.